Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are just before market close on Tuesday, November 23rd. We're going to take a look at SoFi. SoFi having another rotten day today, down about 5% at the moment. We'll see how it closes here in a few minutes. But yeah, just another sell-off off the VWAP. Tried to catch this, well, did get caught by this 1752. It slipped about 14 cents below, but wasn't able to hold this 1829 at all. You see it tried there, stutter stepped for a few candles, and then just trapped between the 1752 and the VWAP all day. And so, I took a look at the daily chart and added in a few things. I know this is a bit hard to look at. You have this grid in the background, plus you have all these support and resistance levels, but we have 1681 to the downside if it's needed. Like I just said, we have 1752 is the most immediate support, and 1829 is the most immediate opportunity to flip something from resistance to support and get some motion going. I did draw in these trend lines because to me, there's a couple of opportunities here. Yesterday, we talked a lot about consolidating, building a base along one of these support levels, and then sort of regrouping and getting something going from there. And the other opportunity here is to sort of start to walk up a trend line and kind of look for opportunities to break out from there. So sort of a version of consolidation, but with a nice sort of bullish lean to it. First things first, though, it needs to catch somewhere, right? It keeps consistently having these big sell-off days. We're talking sell-off days being down almost 5.5, 2.5, over 2.5, almost 1, almost 8. Now today, right around 5. So, I mean, this is starting to feel like what we went through during the lockup expiry, right? But in any case, from a chart perspective, this is what I'm looking at. These yellow trend lines, and these represent previous resistance trend that was flipped to support trend, right? That kicked off this big 13.5% up day. This previous resistance uptrend that flipped to support uptrend right here, and then this longer term solely support uptrend, which hopefully we don't have to flip to a resistance uptrend and trap ourselves down in the, who knows, 16s, 17s, something like that. But we'll see. Well, I guess we're in the 17s already, but we don't need to also be trapping ourselves underneath a resistance level, is what I'm saying. So those are the trend lines that I'm looking at the moment. The EMA is still like just too far off, and the MA that we talked about in last night's video situated right about where it is at the moment. This MA is 1780, right? So it's 4 cents underneath. So that could be providing some solid support at the moment. We'll see if that tends to hold or if that gives way before close or in the coming days, what have you. But at this point, like I kind of said yesterday, it's all about where we're going to catch, and what thought I would add in these trend lines to offer some sort of alternatives to simply just saying, that it has these support levels to try to catch it on the way down. But yeah, to me, there's not really a ton to talk about other than that. We'll flip over to the data in a sec. But I think the other obvious thing that I got into yesterday, and I'll just re-mention it again for folks who didn't catch yesterday's video, Catalyst, right? It's been a hugely catalyst-driven stock since it came in. Catalyst of the lockup, obviously that's a more practical kind of catalyst, just put a lot of innate selling pressure into the market, big sell-off, and then catalysts of analysts coming out with solid price targets drove it up. Catalysts with offerings that were not viewed as sort of positive by the markets, selling off occurred. The first earnings sell off, second earnings big jump, though that's them followed by a sell off. And so I do think for at least the time being, short of having a solid history of relative strength on the chart, it's going to be kind of at the behest of catalysts and analysts, selling pressure from offerings, or perception pressure, I guess I should say, from offerings, things like earnings. Sorry, I'm a little slow here today, a bit foggy. Bank charter is the obvious one, right? And I know some folks are talking about Super Bowl. I mentioned yesterday, I don't know how much that'll actually give the stock price a boom. We'll see. But, things like student loan forgiveness ending. I'm not up on student loan forgiveness situation, to be honest, but all of these things potentially like adding catalysts into the mix, and I just think that that's predominantly what is going to be needed at this point. The other thing is, the 1681 to me kind of looms large because there was this bit of a run up from 1356 into stretching toward 18 here, and then when it came back down and it regrouped and flipped resistance to support and then had the big kickoff to the nice big run, it was at 1681. So I'm kind of wondering if that's where a bunch of this is going to settle in at the moment. And we'll see if this yellow uptrend support offers anything there, or if it even needs to come down to that level, because it certainly doesn't need to 100% retrace to that level. But just something that kind of caught my eye, thought I'd mention. On the data side of things, here's what the biggest option trades are looking like today. Actually 6 bullish and 4 bearish. So kind of surprising to me, but I don't discount the idea of some whales coming in, certainly to offset positioning for sure, but potentially also coming in to try to scoop up decent deals at this price point. But we'll see how much any of that plays out in the coming days and weeks. Lots of return potential once again, and a red month. So back to our red months here on SoFi. And still shorts not seeming to play a huge role in this at the moment. So for better or worse, that just seems to be the case. And just to mention it, I know folks get frustrated in these periods of time. This is why we try to mention locking in profit, getting positions to a smart place while there are huge run-ups like we saw here, coming from mid-13s up to mid-24s over the span of from 8/17 to 11/11. So about 3 months, using those time periods to make smart choices on positions that maybe you had been underwater in, or what have you. And I hope that folks sort of, if they didn't learn that lesson the first time, are considering it this time. And also, I know that when things like this happen, everyone wants me, or probably anyone else who's making videos, to have a crystal ball and just tell you what the price is going to be in a month, or what the price is going to be by the end of the year, or what the price is going to be, like, where's the bottom? I don't know. And if somebody else tells you that they know, they probably don't. Like I said yesterday, I'm not a big hype channel. I don't think I'm at all a hype channel. And so I'm not going to feed that to you. I'm just going to call the chart as I see it, for better or worse. And until it speaks something to us and tells us which way it's moving, I just don't know. But for now, it's obviously moving down, and I'm looking for logical places where it could try to catch price action and build from there. So if that's not your cup of tea, I definitely understand. There's plenty of other analysts, YouTubers, whatever out there that will probably feed you what it is that you're craving. All right, folks, I hope that your trading week is going well and that you're finding other ways to profit in the market. And I appreciate you watching. I will see you in the next video.